73% of first-time tax filers in 2026 are leaving an average of $1,200 on the table because they don't know what they're doing. If you've never filed taxes before, this video could literally put over $1,000 back in your pocket. I'm going to walk you through the entire process of filing your taxes for the first time, and by the end of this video, you'll know exactly what to do, what forms you need, and how to make sure you're getting every dollar you deserve back from the IRS. First things first, let's talk about when you actually need to file taxes. If you're working a job and earning money, you probably need to file. For 2026, if you're single and under 65, you need to file if you made more than $14,600 in 2025. Even if you made less than that, you should still file if you had taxes withheld from your paycheck, because you'll probably get a refund. The IRS isn't going to chase you down to give you your money back. You have to ask for it. The tax filing season for 2026 started on January 27th, and the deadline is April 15th. That's the date you need to have your 2025 tax return filed. Mark it on your calendar right now. Now let's talk about what documents you need. This is where most first-time filers get overwhelmed, but it's actually pretty straightforward. The most important document is your W-2 form. Your employer is required to send you a W-2 by January 31st. This form shows how much you earned and how much tax was already withheld from your paychecks throughout the year. If you worked multiple jobs, you'll get a W-2 from each employer. If you did any freelance work or gig economy jobs like Uber, DoorDash, or Upwork, you'll receive 1099 forms instead. These show income that didn't have taxes automatically withheld, which means you're responsible for paying those taxes when you file. You'll also want your social security number, your bank account information for direct deposit, and any receipts or records of tax-deductible expenses. We'll get to deductions in a minute because that's where the magic happens. Now, here's the big question. How do you actually file? You have three main options, and the right choice depends on how complicated your tax situation is and how much handholding you want. Option 1 is filing for free using IRS Free File. If you made less than $79,000 in 2025, you qualify for free filing software through the IRS website. This is a partnership between the IRS and major tax software companies. The software asks you questions in plain English and fills out all the forms for you. For most first-time filers with just a W-2 and standard deduction, this is perfect and costs you absolutely nothing. Option 2 is using paid tax software like TurboTax, H&R Block, or TaxAct. These start around $60 to $90 depending on your situation. They offer more support and can handle more complex returns if you have investments, business income, or rental properties. Option 3 is hiring a CPA or tax professional. This usually costs between $200 and $500 for a basic return. For most first-time filers watching this, I recommend starting with IRS Free File if you qualify. It's free, it's official, and it works. You can always upgrade to paid software or a professional next year if your situation gets more complex. All right, now let's walk through the actual filing process. Whether you're using free software or paid, the steps are basically the same. You'll start by entering your personal information, name, address, social security number, filing status. Your filing status matters because it affects your tax rate. Most first-time filers will choose single. You only choose head of household if you're unmarried and paid more than half the cost of maintaining a home for yourself and a dependent. Next, you'll enter your income information. This is where you'll input everything from your W-2 forms and any 1099 forms. The software will ask for specific numbers from specific boxes on these forms. Just follow along carefully. Here's something crucial that trips up first-timers. Double-check every number you enter. One transposed digit can delay your refund by weeks or even trigger an audit. Take your time and verify everything before moving forward. Now we get to the good part, deductions and credits. This is where you lower your tax bill or increase your refund. And this is where most first-time filers leave money on the table because they don't know what they qualify for. First, you'll choose between the standard deduction or itemizing. For 2026, the standard deduction for single filers is $14,600. Unless your itemized deductions add up to more than that, you'll take the standard deduction. 90% of first-time filers take the standard deduction, and that's fine. But you should know what you're missing. You can itemize deductions for things like student loan interest, charitable donations, and certain medical expenses. Even if you take the standard deduction, there are several deductions you can still claim. Student loan interest is a big one. You could deduct up to $2,500 of interest you paid on student loans in 2025, and you don't have to itemize to get this. If you contributed to a traditional IRA in 2025, that contribution might be tax deductible. For 2025, you could contribute up to $7,000 to an IRA, and if you qualify, that entire amount could reduce your taxable income. Now let's talk about tax credits, which are even better than deductions. A deduction reduces your taxable income, but a credit reduces your actual tax bill dollar for dollar. If you owe $2,000 in taxes and have a $1,000 credit, you now only owe $1,000. The Earned Income Tax Credit is huge for first-time filers. If you're single with no kids and made less than $18,240 in 2025, you could get up to $632 back. The software will calculate this automatically. If you paid for any education expenses in 2025, look into the American Opportunity Credit or the Lifetime Learning Credit. The American Opportunity Credit alone can be worth up to $2,500 per year for the first 4 years of college. Here's a pro tip that can save you hundreds of dollars. If you're self-employed or did any freelance work, you can deduct business expenses like your home office, internet, phone, software subscriptions, and mileage. Track everything. After you've entered all your income, deductions, and credits, the software will calculate whether you owe taxes or are getting a refund. If taxes were withheld from your paychecks all year, you'll probably get a refund. Before you submit, review everything one more time. The software will run an error check and flag any obvious mistakes. Fix anything it catches. This is your last chance to make corrections before it goes to the IRS. When you're ready to file, you'll submit electronically. E-filing is faster, more secure, and you'll get your refund sooner than filing by mail. The IRS confirms receipt within 24 hours, and most refunds arrive within 21 days. Make sure you choose direct deposit for your refund. This is the fastest way to get your money. Paper checks can take weeks longer to arrive. Just enter your bank account and routing numbers when prompted. After you file, save everything. Download a PDF copy of your return and save it in a secure place. Also keep all your W-2s, 1099s, receipts, and documentation for at least 3 years. You probably won't need them, but if you do, you'll be glad you kept them. Now let's talk about the biggest mistakes first-time filers make so you can avoid them. Mistake number 1 is waiting until the last minute. Don't file on April 14th. File as soon as you have all your documents, ideally in February or early March. Mistake number 2 is not filing at all because you think you don't make enough money. Even if you're below the filing threshold, file anyway if taxes were withheld. That's your money sitting with the IRS, and they're not going to send it back automatically. Mistake number 3 is paying for services you don't need. Tax preparers at strip mall offices love to charge first-time filers $200 or $300 for a simple return you could file yourself for free in 30 minutes. Don't fall for it. Mistake number 4 is falling for refund advance loans. Some tax preparers will offer to give you your refund immediately for a fee. These loans have insane interest rates. Just wait the 3 weeks for your actual refund. It's not worth the cost. Mistake number 5 is entering your bank account information incorrectly. Triple check those numbers. If they're wrong, your refund will be delayed by weeks while the IRS sorts it out and mails you a paper check instead. What if you can't finish by April 15th? You can file for an automatic extension using Form 4868. This gives you until October 15th to file. But here's the catch. An extension to file is not an extension to pay. If you owe taxes, you still need to pay by April 15th, or you'll face penalties and interest. You can estimate what you owe and pay that amount. Then file the actual return by October with the extension. But honestly, just file on time if you can. Let's talk about what happens after you file. You can track your refund status on the IRS. Where's my refund tool? It's updated once per day, usually overnight. Don't check it obsessively. You'll just stress yourself out. Most refunds arrive within 21 days of filing. If it's been longer than that, you can call the IRS, but expect long wait times during tax season. As long as you filed correctly and chose direct deposit, your money is coming. Here's something nobody tells first-time filers. Don't blow your refund. That money isn't a gift or a bonus. It's your money that you overpaid throughout the year. The smart move is to put it toward an emergency fund, pay down debt, or invest it. If you're getting a huge refund, like several $1,000s, that actually means you're having too much withheld from your paychecks. You're basically giving the IRS an interest-free loan all year. You can adjust your W-4 form at work to keep more money in your paychecks. If you're finding this helpful, do me a favor and hit that like button. And if you want more practical money skills that actually work, subscribe to Operation Wealthy. We post videos every week to help you build real wealth, starting from wherever you are right now. One more thing. If you made a mistake on your return after you've already filed, don't panic. You can file an amended return using Form 1040-X. You have 3 years from the original filing deadline to amend your return and get money back if you're owed more. Looking ahead, start preparing for next year's taxes now. Set up a simple spreadsheet or use an app to track your income and expenses throughout the year. Save receipts for potential deductions. Don't wait until next January to start thinking about taxes. Filing your taxes for the first time doesn't have to be scary or complicated. Follow the steps we covered. Use free software if you qualify, claim all your deductions and credits, and file electronically with direct deposit. You've got this. And remember, the more you learn about taxes and money management now, the wealthier you'll be in the future. That's what Operation Wealthy is all about.